Welcome back. Joseph James here, School of Trade, Sideways Markets. It's about that time of day again. Time for your trade of the day and your trade room recap. Now, I want to remind you guys that we are selling out quickly of our Las Vegas Live Trading Summit. We do these quite often, and we have had such tremendous feedback from our members and non-members that have attended that really see value in trading right side by side with a pro. When you go to the blog, sidewaysmarkets.com, head over to the blog, and the lower right-hand side here, you'll see the Vegas Trading Summit. Grab a look there at the Vegas Trading Summit. Shoot us a message here. We're at somebody standing by 24 hours to help you out. Guys, what a great day we had today. Don't forget, though, to register. We only got a few seats left here. Memorial Day weekend, Las Vegas, Nevada. As if you needed another excuse. See, most people go to Vegas and they leave without money in their pocket. We're going to Vegas and we're coming back with more money than we started with. That's the goal, right? And we might just have some fun along the way. For more information about the Vegas Summit, give us a call in the office, 800-381-2084, and we'll be sure to give you more information. Don't forget, too, folks, if you're a member of mine, beginners, you guys get 10%. Intermediates get 30% for intermediates and 50%, half off for advanced members. So if you're thinking about membership, don't forget, extra perk would be half off the live trading summit. Come trade with me. We'll have some trading computers set up. We'll be trading live. And like I said earlier, we plan on leaving Vegas with more than we came in with. Alrighty. The first thing we did this morning, we went right to the blog. We grabbed our morning prep. And what did we talk about today with the morning prep? We talked about three things. First thing was, what's the news? We knew the news this morning, 8:30 and 10:30. 8:30 news was durable goods. 10:30 news was crude oil inventories. Now, crude oil inventories is a big deal, right? It's a big deal. I got a question for you. Here's a quiz. Name me the only other news event outside of crude oil inventories that apply to only one market. Post your answer below the video. Post your answer on the blog here. Shoot us an email. Right? I get a special prize for you. Shoot me an email. Post a comment below the video. Whatever it takes. But I got a question for you. Quiz time. Crude oil inventories are every Wednesday at 10:30. And we know that we've got to be very aware of that because there's very few news events that only apply to one specific market. I'll give you a hint. It's the very next day of the week after Wednesday. Alrighty? Let the clock begin. Happy hunting. Now, first thing we did, we checked the news. News was durable goods at 8:30. 10:30 we had crude inventories. Second thing we did, we went to our advanced course, logged into the course materials. When I log into my course materials, I'm going to use the search box, and I'm going to type in daily price levels. See how easy that is? Log in, grab those daily price levels. The daily price levels are added every evening at 9 p.m. You can see I leave a bunch of them up here so you don't have to go, you can go back and see what yesterday's was. There are the daily price levels for today, the 24th. Remember, folks, these are posted at 9 p.m. the previous evening. That way, all of my Asian session traders, London session traders, and U.S. morning and afternoon session traders, no excuses. You guys have your homework already done. Every evening, I deliver those daily price levels. The third thing we did was now that we had our daily price levels open, up on our charts, we knew exactly what the news looked like today. We set our alarm clock. We have this fancy little alarm clock that we use to keep track of our news each day. I turned on Marty in the crude oil pit, tradersaudio.com. They really have a great broadcast there, guys. 9 a.m., Marty Errico from Traders Audio. So we turned on the loudspeakers in our trade room so we could listen in for the crude oil squawk. And we used that squawk tremendously effective today. It was great. I got to give my hats off to Marty because he really does a great job. I've heard a lot of Squawk Box before, and Marty really does a great job at being enough commentary, enough just listening to the noise, and he really gives me all the information that I need to be able to use a technical chart along with literally finger on the pulse from the trading floor of the NYMEX. Again, that's Marty Errico at Traders Audio. Tell him School of Trade sent you, whatever it is, but get in touch with Marty. That's Marty at tradersaudio.com, and they do a live broadcast. I see a tremendous value in that, and today was a great example of it. Made a bunch of cash today because of that value that he was able to give us. Now, we talked about those daily price levels. So we checked our news, we checked the daily price levels, we logged into our Traders Audio broadcast, and then the last thing we did was we put together a plan. Now, the first thing we saw this morning is we opened up a daily chart. This daily chart, along with the weekly chart, the dailies and the weeklies, if you've been reading the commentary, in addition to these daily price levels, I also give you guys a daily commentary discussing all of this. And what did we say this morning, or last night, I should say? We said, well, we knew that the daily chart had tested this buy zone at 86.91, but look what's happening here. We clearly have a reversal in play. Now, this reversal really is nothing more at this point than a retracement. And we were expecting that retracement to head all the way back up into what we call our trigger zone. So the first thing we saw this morning was that our daily price levels, which every member has, trial through advanced. Everybody has their hands on these daily price levels, so join the trial. Get your hands on them. We knew that it looked like price was going to be rising back up. Remember, we know that price goes from supply to demand, from demand to supply. See, your economics teacher wasn't lying to you, right? You weren't wasting your own time in high school, the economics class, right? Oh boy, I hated those classes when I was in high school. We all know that. But the reality is every market moves from supply to demand, demand to supply. So we knew that since we had tested the buy zone and then began to rise higher off the buy zone, we now know there was enough demand in the market to push the prices higher. On top of that, we knew we had 90.72. 90.72 was our level today. That was where we were shooting for. When we got long later in the morning session, we were trying to hold on to that trade all the way up to 90.72. So that was the first clue we got from the daily price levels. The next clue we got, we moved a little bit faster, now from a daily chart, now to a 60-minute chart. Now, if you'd like to, go rewind the tape and check back on Monday this week. Does anybody remember what our call was on Monday? On Monday, we talked about this bullish channel and how we wanted to buy the lows of that bullish channel. Yeah, well, that's how we made all the money earlier on in the week. Now here we are, and you can see same thing, but now we've run right into a sell zone. See that? Now a sell zone at 89.94. Remind me, folks, what do we do inside of a sell zone? See, I gotcha. No, we don't just automatically sell. That was a trick question, okay? What we do is we wait. And when we test a sell zone, we're going to wait patiently. If price goes sideways, we sit on hands. If price decides to go right through that sell zone, I can buy up to the next sell zone, or I can just wait for it to go to the next sell zone, and then again, same thing. If it goes through it, I can wait, or once it leaves that sell zone, now I know to be a seller. So again, once we test a sell zone, we're not just automatically selling. That would be a little bit too easy. And remember, professional traders don't predict. We react. It's far easier to react to a new move than it is to predict that move altogether. So again, if price is going to go higher, that's fine with me. I'll buy once we break above, in this case, 90.24. However, this morning what happened was price dropped out of that sell zone. Now that we know we've dropped out of that sell zone, what does that mean? Well, we just talked about how when you leave a buy zone, it means there's too much demand, just as we got earlier on in the week. Now there's clearly enough supply. See, there are those buzzwords again. I don't mean to take you back to high school, right? But supply and demand, economics 101. So we know now that price is leaving the sell zone. We know that we have a selling opportunity. Okay, and remember, I'm going to wait for it to leave that sell zone, then I'm going to jump on it and get short. So let's remember, the 60-minute chart, the hourly chart, is telling me what? There's a short-term selling opportunity. Because remember, the daily chart, the slower the time frame, the more important the information. The daily chart is telling us, nah, you might be able to go short a little bit here, but we want to be long for the big move today. This was a great clue. And again, this is how we do it every morning. Every morning, we're going to come in, we're going to check our news. We're going to check the daily price levels. We're going to formulate a plan. Now that we know what the daily price levels were telling us, again, short-term selling opportunities, long-term buying opportunities, let's see what happened. I'm going to open up one of my favorite charts, and this is what I call my VIP chart. This VIP chart is really nothing more than a time frame. It's got to be a time-based chart. I'm a really big believer that time-based charts, specifically, this is a 5-minute chart. This has quickly become my favorite time frame for seeing both the big picture and the small picture. In other words, I want to see each individual candlestick because remember, time charts have a lot of wisdom inside of these candlesticks, right? For example, when this candlestick closed above that London session high, that was a huge clue. And when I combine that by listening to Marty at Traders Audio in the pit, he told me that the locals were still buying. He told me that the big money was still buying. And so we said, okay, candlestick clue says we closed above the highs. Let's stay in the trade. I'm listening to Marty on my loudspeakers. Everybody in the trade room's listening to him on the loudspeakers. And so we hold the trade and we profited because of it. So this is my 5-minute, what I call my VIP chart. I just like the 5-minute chart because it shows me a little bit of everything. You'll notice I can zoom out easily and I can see the whole entire morning session. And I can still see the individual candlesticks. You can't do that with a much faster time frame like a tick chart. And tick and Renko and range, all of those exotic chart types, they lack the wisdom that the time charts have. Now, don't get me wrong, guys. I'm still going to use the Renko charts. I'm still going to use the range charts. I'm still going to use the tick charts. But there's a lot of wisdom that comes from this 5-minute chart. Now, let's talk about what happened today. As you can see, crude oil has been pushing higher here ever since about 9:30 this morning. This morning we came in, and we always use the London session as our first kind of short-term clue. Now, everybody's a little bit different. This is why trading is such a great industry. Because in all reality, there's no right or wrong answer to the way we trade. Everybody has their own opinion on the way to use this stuff. So at 3 a.m., London traders hit the streets, right? Market opens 3 a.m. By 7 a.m., in my humble opinion, okay, and everybody might be different on this one, but 7 a.m., in my humble opinion, that's when the London session stops. Then we have this little pass the baton between 7 a.m. and 8 a.m. Eastern time. And as you can see here, I have just a really simple opening range indicator. Don't worry. I'm going to give you charts. I'm going to give you data. I'll provide you with all the indicators, the templates, and I'll even set all of this stuff up for you on a remote connect call. So members have no problems getting all this stuff working perfectly. So what did we notice today? Well, we noticed that the London session from 3 a.m. until 7 a.m. had given us a range, right? There was our range. And we know from experience that this range, like many other opening ranges, when we are below the range, we're bearish, and when we're above the range, we're bullish. And as you can see here, we ended up pushing below the London lows. This came moments after the 8:30 news. The news at 8:30 was bearish. Durable goods came out horribly lower. And so this was a huge clue this morning that for some reason, price didn't want to go lower. But according to my plan, I got short here. Once we broke below, again, that opening range, which I use as the London trading session, 3 a.m. to 7 a.m., and I got stopped out. So first trade today, as we always say, right, we don't call them losses. This was a trade that didn't work out. Now, we ended up making a bunch of cash today in the room, but it all has to do with your abilities or my abilities to recover from a loss. Guys, I can't tell you how important this is. The ability for you to recover from a loss. How many times as a new trader did I take one loss that took away 3 winning trades? Guys, you've been there before. We all know how that goes, right? We are scared of losses, not because of the loss itself. We're scared of taking a loss because it's going to rob us of the money we've made. And the most important thing that I can teach you as a student of mine is to make sure that you're not afraid of losses. There are 2 easy ways for me to guarantee you're not going to be scared of losses. Reason number 1 is I'm going to make sure that you never take a trade that can knock you out of the game. Whether you're playing poker, whether you're playing sports, whether you're a day trader, I never want to put more in the pot than I'm willing to lose. This is something that I learned the hard way as a new trader. As a new trader, nobody told me, don't risk more than 5% of your trade account, right? Don't risk more than you have to lose. See, if I risk less than 5% of my trade account, that's $500 for every $10,000. I keep little tiny 10 to 15 tick stops. Now I can guarantee, that's right, I can guarantee that not a single trade is going to wipe you out. And then here comes the second thing. The second way that I can make sure that you're not afraid of losses is to make sure that we always use proper risk-reward ratio. See, I don't know about you folks, but when I was a brand new trader, I would have a 3-to-1 risk-reward, right? I loved to take huge stops and small winners. No, I swear I'm not looking over your shoulder right now. I think everybody who's been a trader for more than a few months knows the words to that song. I take 3 winning trades, and then I take 1 losing trade, and it's all wiped out. You know what I'm talking about? If you don't, consider yourself lucky. Most of us deal with that backwards risk-reward ratio. Okay? In other words, letting our stops or our losses run and cutting our winners too early. So we talked about how making sure that you're never going to risk more than 5% of your account. But if I'm going to risk 5% of my account, I want my reward to be 15%. Now, if I take a 5% loss, think about this. I take 1 trade that costs me 5%. Okay, think of it in percentage terms. But then I follow it up with a trade that earns me 15%. Then let's say that I took the wrong trade next. My next trade is another 5% loss. I'm still up by 5%. You can see the point. So the point I'm trying to make is that I'm going to make sure that you never fall victim to that scared of losses mentality. It's easy to get down that road, believe me. I'm not innocent either, guys. I blew out plenty of trade accounts when I first began doing this. That's how I learned. And that's why I'm so effective at teaching new traders how to get over these, what is mostly just emotional and psychological obstacles. I'm going to give you the plan, and that trading plan is going to tell you 1 to 2, 1 to 3 risk reward, and never risk more than 5% of your trade account. And then I'm going to hold you accountable every day in my live trade room. That's my value for you, is I'm your partner in business. I'm your trading partner. That way I can hold you accountable. You'll learn more every single day. So here's what happened. First trade wasn't a huge loss, about a 12 tick stop, 2 contracts deep, so I lost about 24 ticks on it, lost some money in the trade, no big deal. I know that my risk-to-reward ratios are in play, and I know that for me personally, I'm only risking about 2% per trade. So for me, I can make lots of mistakes and not worry about it. Now, I want to remind you, we're listening in to the broadcast from Traders Audio from the NYMEX pit. I get stopped out at the lows of London. We go right back up in, maybe a little bounce after the news. I mark this as a swing high, and now I'm listening to Marty from Traders Audio telling me locals are buying, locals are buying, locals are buying. When I hear Marty yelling and hooting and hollering there on the pit, telling me locals are buying, now I know when it pops its head right back into that London session, it's a fake out breakout, and we're going right back to the top. I wanted to remind you, though, for one thing. We had a level in mind. What was that level in mind? It was a daily chart. That's right. It was 90.72. 90.72. That was where we were hunting for. And this was just a great example today of how I really do see a lot of value in that broadcast from the NYMEX pit from Traders Audio, because I marked up my swing high. Marty told me they're buying in the pit. We break above that swing high, and now I'm getting in long. Got stopped out of the first trade short. Not so fast. Swing high. 9 o'clock opens up on crude. I'm listening to Marty tell me the bulls are in charge, and I'm getting back in. Remember, folks, if we try to break out of the range and we fail, very big short signal, right? Huge selling opportunity there. Same thing is true if we break to the downside and we fail there as well. Now, fast forward. Now here we are sitting sideways at 9:30. This was really important. We're sitting here with everybody in the trade room this morning, and we're talking about what are we seeing, what are we hearing. Market personality gets really sloppy, but then we get that clue from the pit. As I'm listening to the broadcast from the NYMEX pit, I'm hearing that the locals are now selling to the dealers. What does that mean? Well, I was told that at 9 o'clock this morning, the locals were buying. Who are locals? Locals are just simply individual traders. Usually they're generations after generations. Usually your granddad was a local, right? Or your uncle. Not many people just stumble into trading into the pit. It does require a lot of experience. They do make sure all of these locals, right? Locals are just simply people that take the train into the city and they hit the NYMEX pit every morning. They got large trade accounts, lots of experience. They don't represent any firm, right? They're not representing Goldman Sachs, JP. They're not representing any banks. They're not managing a pension fund. They're managing their own trade account. And they're usually very well-known people in the pit. These pits are not that big, right? The pits really aren't that big. So Marty's telling me the locals are buying. Locals are buying. I get long, and now I listen in during the chop and slop, and what he's telling me is, and you can see there's a pennant that formed here, what he's telling me is the locals that were buying are now selling those contracts to dealers, or what they'll call paper. Now, a paper trader is somebody who is a trader that represents the New Jersey Firefighters Pension Fund, right? The California State Teachers Pension Fund, right? These are a couple $100 million, if not $1 billion under management. These are big boys. These are the big money that we always talk about. Now, you can find this information on your time and sales window, but it's going to be broken up. So again, this is where you immediately see value in having that direct audio connection to the NYMEX pit. Okay, and I'm not lying to you guys. I'm hearing locals are buying at the open. Now the locals are selling, and we've got Goldman, we've got JP, we've got some of the larger, either called paper traders or dealers are coming in to now absorb it. This is often called accumulation, where the locals buy it up. They now have contracts. They're now long crude. So the locals now say, well, we're all the way back to the highs of that London range. I'm going to sell these contracts over to you, Goldman Sachs, over to you, JP, over to you, Citi. And you know what's going to happen now. Something, whether or not we go lower or higher, but something's going to happen now that the locals are unloading their contracts. I'm hearing that the dealers are buying. So I'm going to stay in this trade. We decide based on Marty and his analysis, we decide to stay in the trade, and we jump all the way up. At this point now, everybody in the trade room is well in the green, but we got a big problem. We got a tough decision to make. 10:30, we've got inventory news. Now here's the problem. Crude oil inventories. Remember we talked about this earlier. Very few markets have one news event that is directly tied to that market. Crude oil is one of them. Did you figure out what the other one was? Remember, post that comment below the video. Let me know. So we know that crude oil inventories, it's a huge deal for crude oil traders. So we know we've got to be careful. And in my humble experience, in my humble opinion, in my 12 years of doing this, it is better to take the money now than to try to hold it through this huge news report coming down the line. So we're up by over 100 ticks on this move by now, and we're just loving life, and we decide I'm going to take my money and run before we go through this chop and slop. Now, clearly, in hindsight, yeah, might have wanted to hold on to that trade. But you know what, guys? At the end of the day, what do they always say, right? What's the old saying? 2 in the hand is worth 1 in the bush? No, it's got to be your bush, Joe. It's 1 in the hand. I'm kidding with you. 1 in the hand is 2 in the bush. So I'd rather have 100 ticks realized in my trade account going into that major news than to have 150 ticks possible. But you know what's going to happen if I hold on to that trade. It's going to end up coming all the way back down, and I'm going to be kicking myself because I had dug myself into a little bit of a hole on the first trade, remember? And so I was not really in the position where I could hold on to that thing. Now, what I want you guys to remember, though, is even though I took my money off just moments before that news event came out, what was that number again? Again, I'm not talking about these daily price levels for my health. 90.72. Those daily charts, right? That daily chart today, on the 60-minute chart, we also had 90.75. Okay, we had a ton of easy to find price levels that we were shooting for our longs. And I want you to see what happens. There's your 90.72 right there. We end up going all the way up now. We actually pushed well above to 91, as you can see. But the reality is we were about 40 ticks away from it. And so we sacrificed some profit. But you can see, though, our plan worked effectively. Yeah, shoulda, coulda, woulda, should have held it, would have done this, could have done that, whatever. The bottom line is, at the end of the day, we had real cash in our pocket at the end of the day today. My hat's off to all the members out there. Excellent, excellent work today. Every morning we come in, we do an official morning prep. That morning prep involves reading the news, reading our daily price levels, and don't forget, last thing is formulating a plan. This morning, we planned our trades, we traded our plans, and every morning in real time, we use our very easy-to-use entry trigger indicators to get into trades, right? We use the entry signals that we see on these charts. I make it so easy for you guys to shadow trade with me every single day. Now, I want to personally invite you, come join our free trial. If you're not a member yet, we have so many resources for you in our membership. Now, I didn't talk about the specific trades that I took today. Okay, those are only for members. Advanced members, you guys have an entire recap. So advanced members, just log into your advanced course and you'll see today's recap. Every single one of our members trial through advanced. You can log right in and get a much more detailed recap than we provide on our blog. I also want to remind you, we've only got a few seats left to come in and see me Memorial Day weekend in Las Vegas. Members, you guys get some great discounts. And this is going to be not only a great time to learn and earn, but a great time to meet other professional traders and maybe even have some fun while we're at it. Want to thank you all for tuning in today. My name is Joseph. Thank you so much for being here. Don't forget to join that trial. Don't forget to come see me for the live trading event in Vegas. And we'll catch you guys next time for our trade of the day and our afternoon recap. Adios, amigos. Bye-bye for now.